Okay, morning guys. Just let me know if you can hear me and we'll get started. I'm just a little bit slow to set up here. I didn't have these charts open. I was looking at some others. I'll just get them going. Here we go. Okay, nice little bounce overnight, which was kind of interesting, really. All right, let's get going. Welcome to Trade Setup and the overnight stream. What do we got? The 26th. So overnight, we're having a look at that. Market didn't look, it bounced from the previous session, which is I guess wasn't unexpected. You knew that some support was going to come out sooner or later, whether it be trade or something along those lines. And it seems to be that they're focused more on, which is quite clear, they're focused more on trade than the impeachment. So I think what they're viewing it as the impeachment, Trump, if it goes through, it seems to be pushing through now. But if it goes through, if they do impeach him, I don't think it's going to have much to do with the economy. As a lot of people are sort of looking at that. It's not going to have a big effect on the economy. It will on the politics of it all. So, I mean, worst case scenario, it could be a good thing for the economy because it sort of pulls him back on trade wars and they start to get that organised, tariffs organised, and start to get a deal done rather than just argy-bargy around. So that, I think, obviously, it just shows maybe it was a bit of a knee-jerk reaction on what was it, Tuesday night, to that impeachment and different news. Obviously, Trump's come out and talked up a deal sooner rather than later. I mean, these sorts of words have been used many times in the past. I'm a big believer, and I'm still a bit of a firm believer, that China is not going to make a deal anytime soon. They're going to drag it out. Whether they're going to, there's talk of them a while ago dragging it out to the 2020 election, but Trump's trying to be, I guess, forceful. And I just don't think it's going to work with them. Excuse me. They seem to be weathering the storm. The US economy is weathering the storm a bit as well. It's all at the moment based around sales. So the retail client or the consumer, and they're hanging in there okay. Excuse me. A bit of a frog in my throat there. So yeah, the market's bounced overnight. You'll see. We'll just quickly go through what we're looking at there. This is the Aussie. It's still trending lower. It's still finding US dollar pressure. There is sort of that push lower in US dollar, and it bounces straight back like it did. It fell over, or was it Tuesday night? So you saw early hours of Wednesday morning or yesterday morning, and then basically brought straight back up. So from about 8 o'clock open, I think when the currencies are back online, it went straight up from there, right through Asian session, right through the European session, and just kept chugging higher into the US session. So that's put pressure on gold a bit. We saw gold drop off, put pressure on other currencies. Euro's got issues with their Eurozone environment at the moment, the economic environment. So they're under pressure there. And so that's good. That, so with the Aussie, yeah, just heading higher, US dollar, it sort of bounced back up, which a lot of the currencies did. You look at the Euro, same scenario, it sort of popped back up to the anchor and then headed south. We had an alert on this to roll over. We sent it probably a day earlier and it come back up and test the highs, but then the shoulder played out beautifully. And then it's, just dropped off a cliff there pretty much. So that worked well. There is a bid zone on the Euro down at about 109.30. And it's not far from there now. We might get a bit of reaction if it consolidates around these lows. Bang! It could go straight through, blast straight through. So again, that's extended to sell into here is probably a bit really, I think, way too aggressive. You might want to see some sort of consolidation like this and spike back up. Could have a big retracement. I mean, like this move down, retraced all the way back up again. Could be the same. We don't know. So looking for a buy down here is probably, again, you don't like to buy against a trend, but when things are extended so much into a zone, it could be more opportune to buy when you've got some high lows play out. Otherwise, just then you're going to be on really on the defensive to make sure that it doesn't whip around and chop you straight back out again. So that's the Aussie. That's the same. Pound got knocked in the head. We're talking more Brexit concerns. What is it? The Prime Minister said doesn't care if he leaves without a deal, but he's going to leave basically, even if it's against a new bill that's just been passed in Parliament. So if it warns him against it, he's still willing to do it. So he's for leaving the EU. He's been an advocate for that for years. Boris, good old Boris. So I think he's set in his ways. It's going to happen in his books, whether he likes it or not, whether they like it or not. So I think he'd be doing all he can to leave the EU with or without a deal. Doesn't care. He just wants to be out at the moment. So it's just causing prolonged issues over in the UK and with the pound and all that. So US yen bounced straight back. We had a selling on this, pop down, and then was straight back up when the US dollar retraced, which you'd expect. Now gold is look, it fell over. We're looking at these high lows holding. We'll just take that off. Cancel that. High lows are holding. Get that out of the way. They were holding up until, I don't know why it doubles up on the things. Yeah. Get out. There we go. All right. Sorry, guys. Just have to clean it up a bit. There you go. All right. So for me, gold is, look, it did retrace, but it's a bit in line with the whipsaw effect that we saw previously. The market's powered down. Like we said, it started to bounce. We're looking for that bounce. And then it's powered straight back in. Didn't quite expect it to come all the way back down to support, but that was rejected a few times and we lifted. So whether this is the time when we're going to, drop down and then, push through support, I don't think so. I don't think that we will. I think this leg probably got a bit extended, too extended for some, because you still got, remember, the US economy is actually chugging along nicely. That's putting on some gains. Then you've got issues. So Trump is always talking up trade. So he's supporting the market. So when you get to sort of these highs, extended levels on gold, for instance, which is going to be bought up as a safe haven, it's hard to hold on to that long if there is potential that a trade deal will come through. I mean, realistically, we know that it potentially won't, if that makes sense. So I'm a believer. Times he comes out every day, he's talking up trade, a deal, all these sorts of things. He's there to support the market. Now, it does, like I said, it just makes it hard to hold a long position into gold or something as a safe haven asset. If it gets extended, if you're looking at, you've got gains sitting in your books, unbooked gains or paper gains for now. Unrealized is the word I'm looking for. Unrealized gains sitting on your books that you're looking at it going, well, if he turns around and actually something gets done, I get caught off guard, then this thing could collapse. So people are on edge to take profits as long as he keeps talking up a deal. Now, whether it happens or not, it's a different story. So I think whether it happens, people are still skeptical of anything getting pushed through. That's why that support's not breaking. So I think what it's doing is providing opportunity. You're getting these punch down to support, looking at buying off high lows, see how far you can get that run. Probably initially it didn't get too far. This run got a lot longer. So whether or not this is just going to be a major high low, this is, in all honesty, probably what I'd be looking for if we get some sort of chopping around here and then starting to hold and pushing back up and really targeting up to those highs. But I think, again, anytime he talks up a deal, bang, that gold could come off or could come under pressure because people are starting to realize the economy is not doing too bad. So what would happen if he made a deal? That means probably equities will take off, gold will collapse, you would expect, because all these things are interlinked and it's all linked into trade. And at the moment, I don't believe that the deal's going to come through. I think China are dragging the chain a bit. But Trump's talking up, so any chance he gets, he'll be talking up. And that really puts the pressure on, or just keeps the pressure on us, whether or not people are going to get sick of hearing the same old, and are going to get skeptical. But at the moment, there's no real reason to get skeptical, if that makes sense. So yeah, we'll see how we go. What do we got here? US, the S&P, that looks to me, it's getting a bit of heaviness to it. You've got that push through that support at 28, 29.80. You've got that bounce. So whether or not we start to find a bit more selling pressure coming in that holds another lower high and then come down to retest. But again, we haven't played anything yet. This could just hold here and power straight back up again. So you've really got to just set yourself, plan ahead, and what sort of action. If this starts to hold and chop around here, we've seen buyers hold and consolidate these highs, then yeah, I'd expect it to go higher. If not, if you get sort of a pop high, wash out the highs and then start to retrace, and this is where you've got to look at what the action is actually doing. If it gets up just through those highs and starts to fail, that's not a good sign, because it's a sign that once you get into new highs, or past this previous one at 29.90, the market's not willing to follow through, and it can happen quite a bit. You can see when it gets through the highs, like say right back here, pushed up, pulled back, got through the highs, failed, had another go, failed, collapsed in there, but you got through the highs, failed. A strong market will power through the highs if it's strong. When it's not that strong, it's just choppy, and it's that uncertain that's coming through in the charts. Now the DAX, much the same. It's rolling over. That looks a lot more negative, and their key level. So we're on. Anyone wants to check out TradingView? We've got up and running. Get on there. I think it's, if you get onto trade_setup, you search, it's capital T, capital S, trade_setup. I'll bring it up in a sec. You'll see different posts we're putting up. Now, I think I actually put this on my own TradingView account, but there's going to be bits and pieces we're going to start flowing into TradingView. It's just a different environment to get our word out there, I guess. But yeah, there was something on the DAX we were looking at up here, right up here, and the lower high played out beautifully, collapsed. And then the way it collapsed and the way it was consolidating these lows didn't give me confidence to, it did just push through the low. So we're talking about this yesterday. I think it was yesterday. It popped through those lows there, didn't follow on very much, but it also didn't follow on to the upside. So when the market opened and realizing that the DAX, this had reacted to the US because it's a futures, but the market, the equity market closed earlier. So the equity market was still sort of probably somewhere up here before the DAX collapsed. So what you're getting is that the equity market's going to open. If that negativity flows through too much, then the DAX is going to collapse again, which it did. It just fell over, and we've got this good push. So if you're looking at the short, was up off this lower high or the shoulder, continuation of that trend down. You've got that expansion lower, contraction up, and expansion lower, minor contraction, further expansion lower. So if that was from there, you got about 12,362, and you got somewhere down to 162, nearly 200 points. 200 points probably obviously took some off into the close, but yeah, that trade is still playing out. It's still holding. I think the anchors, I'm looking at it at 12,290. If that holds, we could get the same sort of scenario, a good correction up, but we turn around and roll over and take out these lows again. And the overall structure, is looking, very heavy for me. You got a double top or triple top up here, a lot of pressure on the upside, sellers starting to pile in, and a lot of fuel that's built up over a longer period that could be ready to exit. Is sitting in there. You're either sitting on profits way back here, you give it a bit more room to bounce, but anyone sort of from here up is either underwater or out. And if they're underwater, they're probably looking to get out. So as the market creeps low and puts pressure down, there's more people sort of lined up, or more buyers that are lined up ready to jump back out again. Hope that's making sense. Any questions there before we just have a look at where the ASX is opening? Just pop up. I'm just going to quickly check something. No worries. All right. Any questions? Just what we're looking at? We have got the US yen. I said we had an alert. If you get back onto, like I said, the TradingView, there was an opportunity there we saw as a short, and it did pop up. It did fail. We're looking at around this zone here. It did continue up a bit higher, retested the high, washed it out, and then formed the shoulder. So that traded quite nicely, but it's just key on, I guess what it shows is really just having an understanding what's moving the markets, what's happening, and how that's going to react to the US dollar, because the US dollar is a big thing at the moment, potential rate cuts with the ECBs. The US dollar is obviously basically controlling the other currencies. They've got their own issues like Brexit for the pound, Eurozone for the euro, but generally it's linked right into the US dollar. Obviously being the cross. But if you're not knowing what's the US dollar, how it's going to react to different news, then you're sort of at a disadvantage. All right, let's have a look at the SPY. SPY's opened up. It seems to be holding this 67.11 highs. So the SPY is very choppy. You saw this big sell-off. It closed on its lows. Now that was, what day was that? For Tuesday? So it was Tuesday night. So coming into the session yesterday, the market's bounced and it opened stronger than I thought. I actually didn't think it was going to open up. The SPY sort of pressed up. So this was the first. We're on a half an hour chart, aren't we? Let me get to a 5-minute chart. Let me just flick it over. So that is, the open. So we were talking about this yesterday when the ASX was opening. The ASX, we're expecting it to say somewhere from this close, somewhere down 30 from the 4 p.m. I don't know where it closed at 4 p.m., but we're always looking at, say, the 4 p.m. close, the previous session on the ASX, and where the SPY moves. So the difference basically was down 70 at that stage. Now the SPY started opening up, which not catching us off guard, but you're watching the SPY open, and you got one or two things could happen. Either the SPY is overextended, it's just cleaning out some shorts before it comes back around 5 past 10 before the ASX finishes opening, and the ASX does open down 70, or the futures are pointing to not as weak a open, which it did. The ASX actually opened down about 40 instead of 70. So really what you're looking at is the SPY popping up 30 points on the open. Does that make sense? So they all sort of come back in line, and then after 10 past 10, then they start, you're trading together, and that's where you start to see what trend is starting to play out, where there's going to be more flow into equities, buying support, which we did get yesterday. We got some buying support kick up. Now, the only real opportunities I saw, this market was extended, and it was about 20 past 10. I didn't really see my, the typical M pattern or the W pattern, M pattern play out, not W pattern, that's on the downside. Not really the M pattern playing out. So you've got off a good extension. So you want this to be around the highs. You want it to be sort of well and truly extended, get your minor M pattern, and then jump into a short where you know exactly where your risk is, and it's off a minor shoulder. Now that there I wasn't really considering. I mean, technically, it could be short. You got your shoulder extension up, but the 30-minute trend was actually up. So it was a hard one, would have been a hard one to take on the downside. Look, it did work out for a few points. Probably, if you short it on the break of that candle, then you bought it back, when this reversal candle of green, then you're probably 1 or 2 points up if you're lucky. So no real damage done if you did take it. On the upside, you can see the market's pressed up, pulled back, and then you've got, this green candle is a good heads up that, okay, what's going on? So you've got 1, 2 moves down. So we're always looking for, if the market's pressed, oops, that's not what I wanted. The market's pushed up, and then you've got these 2 moves down, generally washing out people. So anyone that's held through that, the second one will clean up a lot more people, a lot more traders, a lot more buyers, and puts them back on the sidelines before, you're looking to head. Well, that wasn't the world's best chart, but you know what I mean, before it starts to head higher. So you've got that extension, secondary pullback, and then you've got your high-low build, and then you've got an expansion off the MA. So it's sat on top of the MAs, sat on top of the averages, and extended into new highs. Did play out okay. All in all, probably a few points on that, but it really was much of a grind last night up until probably we got to that 67.11 mark where it fell over. And again, it wasn't anything that would have been confident in taking short off that. I mean, it was just more of a grind. It wasn't extended away from the other MAs. You don't want that. You want that extended trade where it really hammers higher, knowing that there's going to be someone taking some shorts off, taking some longs off, and pulling back to the MAs. So that didn't really play out. And then you could see after that, market fell over. That was the close of ASX, fell over in the European session start when they were negative on the open, and we started to lift again and really just chopped around straight back up to these highs, finished back up towards the day's highs. So yeah, it'd be interesting to see, like we said, what happens in this zone when we're sitting up at 67.11 at the moment, whether we chop around here and we fail again off that high and pull back. So what we'd be looking for is really that shoulder trade. So you've got, the fuel. So you get the markets pushed down, built that high, minor higher low, press back up. Now, if it fails at these highs and we get some negativity come into the market, you'd be looking for that lower high and see if we can get some of these buys that are built up over last night into the close, squeeze back out of the market. Because if you're holding it pretty, if you're bought it in here, bought off this first pullback, you're up. Okay, so there's no pressure just yet. You might be willing to leave it thinking, okay, if I got my stop under this zone, I'm locked in at least 5-10 points of gains. But let's see if it can get through the highs, because it could easily do that. It's been supported during the days, the market. So if you're holding it that way, or even if you're holding it later, you might be just under these lows. So there's different levels of pain, or what you call sweaty palms. Who's got the sweaty palms in different zones? So anyone that's bought it late has got sweatier palms than these people that bought it, say, in here, or that even less down on those lows, because you're sitting on more buffer. So we'll see how that plays out. If that does come down, start to put the pressure on the sweaty palm and give you that sweaty palm feeling if you're long, and holds a lower high, it might be worth looking at that for a bit of a short. But until then, we'll have to wait and see what plays out. Anyway, last thing we'll just see is running up 2.6. I think we're looking to open up 10 to 15 on the ASX. So it's only, well, it's only a few minutes to go. It's probably not quite as strong as what we thought, but we'll see. We'll see. All right, guys, we'll probably call it a day there. Any questions before we leave? Feel free to chuck it in. Otherwise, we'll be back in on, well, it's tomorrow morning. And then, actually, tomorrow is a Melbourne public holiday for the grand final. So I wouldn't suspect they do much to the ASX. Only Melburnians love it, go to the parade, but we'll see how we go. BWX, let's have a quick look at that then. Excuse me. BWX, I suspect, has just kicked off for us. So we had an entry in that. It's just triggered on the open today. I like that. I think it's quite nice. I think you've got this rising. We're sat on top of the MAs here. Nice pattern on stochastic. So what we're seeing, we'll get a bigger one on that. Here we go. See, the market's moved up. It's consolidated off the MAs. MAs are rising. Good buying pressure, lifted it. So you can see the buying pressure here from oversold to overbought didn't move price that much, meaning there's more sellers in the way that are willing to stand in the way. There's more sellers willing to come. There's still some more selling to go. Anyone that's wanting to sell it, whether it's a big position, small position, there's still quite a bit on the sideline that's ready to come in and pressure that market. But as it's getting soaked up, you can see it went back from oversold here to overbought. It didn't get down too far. Okay, price didn't really move. So that, to me, is signs that it's getting soaked up. You're getting buyers soaking up the selling pressure, and sooner or later that selling runs out, and then you've got, when it goes from sort of overbought again to oversold to overbought, with the stochastics, the buying pressure is lifted, but it's actually moving price a lot more now. So to me, that's meaning that sellers are not standing in the way of that as much anyway. So it means the buyers, the movement's weighted to buying. It's weighted to the upside. So if that's the case, and we've got this consolidation to high as we go from overbought to oversold, where you're moving, the pressure's moving down, so sellers are coming in, they're looking to book some profits up here, but it's getting held up. It's consolidating those highs, which is a good sign of strength. So I'm expecting that just to keep lifting. We'll see how that goes on the weeklies. The weeklies looking good as well. Yeah, that's starting to lift as well. I think we've just taken out a few key levels, this level in here, right down at 250 with that spike up. We've got a secondary move, so if the it may start to cross on the upside, we could really get that start to extend back up again. And from here, you don't really have too many. You've probably got up to around 450 to potentially $6. $6 was another recent bout of selling up there. There's not too many, strong levels, I would say, that's going to run into. All right, guys, that's about it. Excuse me. We'll see how we go. Have a good day, and I'll speak to you again tomorrow morning. Cheers, guys. Bye.